It's a very complex area. There's a lot of detail in this proposed bill from the government. It's called closing the loopholes, is what it's called now. Initially, it was called same job, same pay. Is essentially is that the problem as far as you see it, that same job, same pay mentality for contractors or others is fine to say, but difficult to deliver when a business is dealing, say, with someone who's worked at a place for 30 years as opposed to someone who's been there 6 months?
Yeah, we do see a big problem with that principle of, same pay. Many different jobs have different pay levels because people have different experience levels, or they're harder workers, or there's different business conditions. Differences are not a bad thing. They're a good thing. In a modern economy, you want flexibility. You want to be able to adapt. You want your business to be able to meet the market, meet consumers. So even on that part of these reforms coming up, simply because there's the assertion of a loophole doesn't mean there really is one.
One of the other areas the bill looks at is the area of gig economies, Uber drivers and so on. Isn't it better that those sorts of workers get greater protection and support?
Well, we think a critical part of these new tech platform, they are a very important and dynamic part of our economy, and we want them to thrive. But what they need is flexibility. You can see in America, they gather these enormous Silicon Valley kind of tech firms because they've got enormous flexibility. In Australia, if we start building in inflexibilities, rigidities, you're just going to scare away investment. So you might think you're doing a good thing, but in fact, you're actually snuffing out parts of the industry.
And finally, on the RBA decision tomorrow, the first under the new governor, a lot of your members would be doing it tough right now in the face of rising rates. They'd be concerned they'll go again. What's the general mood? Do you think they will move in her first meeting as the governor?
Well, it is her first meeting, and I don't think she'll be changing the Philip Lowe course, which is to try and bring inflation down as quickly as possible to the 2 to 3% band without throwing the economy backwards. So that's quite a fine line that they're trying to manage. Businesses are feeling in a pessimistic mood. Business conditions, we did a survey just in the last week or so, business conditions pretty flat for manufacturers, but the mood is pretty ordinary. So we do urge the Reserve Bank to take into consideration the conditions of business at the moment, and of course they'll be looking at the broader consumer aspect as well.
And one of the challenges is, while they're trying to achieve that very narrow path, inflation in and of itself is already hurting people because by its nature, it means cost of living is up, prices are up. So that's already smashing people right now and businesses.
That's right. So in a sense, there's a timing aspect to this. The RBA will be thinking maybe there's short-term pain for longer-term gain. That's why they jacked up rates for a start. They've been bringing them down. Now, they just don't want to see inflation pipe up again because that would further throw a spanner in the works of the medium term. So they're trying to bring about the desired outcome as soon as they can.
David Alexander from the Chamber of Commerce and Industry, thank you. As always, appreciate it.
Thanks, Kieran.